Hey, what's up, my friend? So, welcome to the market analysis for the month of July. So, this video here is where I share with you the trading opportunities that I'm seeing right now, as well as, sometimes walking you through, right, a few of the trades that I took, the winners, the losers, and to share with you my thought process behind it. So, this is basically what this monthly video is all about: sharing my analysis, sharing my wins, sharing my losses, sharing my thought process, and to help you, better understand the price action of the markets. So with that said, right, let's begin. So the first market that I want to share with you, which I think there is a nice potential opportunity, is gold. So if you look at the chart of gold, right, the one that you're seeing right now, you notice that it actually broke above the multi-year highs, right? I just zoom out a little bit. You can see that the price over here has actually broke above this key area of resistance over the last few years. This resistance, right, has been around since 2013, 2014. So this clearly, right, is a multi-year highs, and the price has broke out of it. So at this point, some traders might have caught the breakout. Some traders like me, right, did not catch the breakout, and I'm looking to hop on board the trade. So clearly now your bias, right, your bias on this pair is towards the upside, right? The trend is up, right? Very simply put, right, the price has made a series of higher highs and higher lows. Okay, higher highs, higher lows, higher highs, higher lows. You should be looking to buy gold right now. But the question is where? Where do you want to buy gold? You don't just want to buy gold at any Tom, Dick, Harry, Sally, Princess price. You want to buy it at a price level which you think is reasonable. So there are a couple of ways to do this, right? So here, let me share with you a couple of trading setup, right, where you can look to buy gold or trade gold to say. So the first thing is, notice this area over here, right? This is a swing low on the daily time frame, right? And usually if you see a swing low on a daily time frame, it's usually an area of support on the 4-hour time frame, right? If you go down to the 4-hour time frame, you can see now that swing low on the daily is now a much obvious area of support. Okay, so one simple setup is where the price could come down lower, swing lower, and then do a false break where it trades below this area of support, taking out the lows, taking out the lows, taking out the lows, and then it reverses and close strongly back above support. So when this happens, right, what happens is that there are traders who are going to go short, right, who believe that, oh man, gold can't go any higher, right? I want to short this. So what they'll do is that if the price breaks below this area of support, this group of traders will look to short the gold market. And if the price breaks below support and does a sudden reversal up towards the upside, you can imagine that that group of traders who are short are now trapped. Because if you short the breakdown and the price reverse, it hurts you, right? So this is how you can actually sort of take advantage of this phenomenon from this group of trap traders. That's what we're looking for, this false break, to trap this group of traders, right, who are short the breakdown. Okay, so as you can imagine, if the price, right, reverse back higher, right, those group of traders who are short, right, now have to cut their losses, which will fuel further buying pressure. Okay, so this is a simple setup I'm looking for, the false break on the 4-hour time frame. So this is gold. Another setup could be, let's say, right, the price might not come into that area of support, this swing low over here on the daily time frame. So what now, right? Another possibility is to buy the breakout. So now you're buying with momentum as the price breaks out higher. So you can place a buy stop order over here, or if you want, you can wait for a break and close above the highs before you go long. Okay, so if gold breaks out, right, you can look to buy when it breaks above the highs. And stop loss, right, where I would place it, right, is 1 ATR below this swing low. Okay, so 1 ATR below this swing low, somewhere about here. So if you do not know what is 1 ATR, just pull out the average true range indicator. Okay, I usually use 20 period. So this is just a super quick one. I use the SMA. I find out what's the value over here. Okay, let's say it's $20. I'll take this value here, let's say it's X minus by $20, and that will be this level here. Let's say it's X minus by $20. That will be my initial stop loss. Okay, so this is how I would look to trade gold, either if there's a false break towards the swing low or a breakout higher. And the way I'm going to manage this trade is that, since, right, this is the possible start of a new uptrend, I want to be riding this move for as long as possible. So a few ways you can ride the trend here on gold. Number one, you can just use a tool like moving average. Okay, the 20 or 50 period moving average, it depends on what type of trend you want to capture. Let's say, for example, in this case, right, gold is still above the 20 MA, so you can hold on to the trade, right, as long as the price is above the 20 MA, and then exit only if the price closes below it. So that's one way to go about it, right? Trailing your stops using the 20 MA. Another way you can do is what I call the market structure. So you know that in an uptrend, it consists of a series of higher highs and higher lows, like this, right? Uptrend, higher highs, and higher lows. So what you can do is that if you want to ride the move for as long as possible, you can trail your stop loss, right, below the previous swing low. Let's say the price now is here, you can trail it below this previous swing low. So set your stop loss, right, a buffer or a distance below this swing low, let's say somewhere about here. So you know that if the price were to make a reversal, right, it has to at least break this swing low here, right, before hitting your stops. And if that happens, right, chances are the trend is about to come to an end, it's getting weak, and you might not want to stay in the trade any longer. So that is another technique that you can use, right, what I call market structure. So there are many more, I leave it to you, right, but just want to share with you the thought process to why I'm bullish on gold, right, and a couple of ways to to ride this trend, right, should it play out further. Next market, right? Next market I want to share with you is Pound Canadian. Pound Canadian. There you go. Okay, that wasn't me, right? That was Rayner Jr. That wasn't me. Pound Canadian. Okay, so Pound Canadian, you can see that this market structure, again, back to fundamentals, right? Ask yourself, what is the trend in this market? That's usually the first thing I ask myself. What is this market structure? Uptrend, downtrend, range. It's only one of these three. So Pound Canadian right now, right, based on the looks of this chart, price has break below this area of support, right? Pretty strong break, right? So the trend is down. Okay. Next thing, right? Area of value. Where is the price right now? Is it trading near an area of value? So there are a few ways to define area of value. If you just solely trade off support resistance, right, then this would be an area of value, right? Previous support, right? Previous support. Now I guess resistance. So you expect price to come up higher, then possibly get a price rejection and then come down back lower. But that's if the price, go back to that area of value that you've defined, right? So usually in such a strong trending market as what you're seeing right now, this is a strong move, right? The price may or may not get back to this level. So another way to define area of value, at least for me, is that to use the 20 MA. So in a strong trend, the price tends to, come close towards the 20 MA and then bounce off and, continue lower. So you can see over here, close to it, hit down lower, almost there, hit down lower, and right now it's still quite a distance away. So this, right, tells me that, okay, I can use the 20 MA to serve as an area of value. I don't want to be selling yet, right? Reason being is that if I were to sell Pound Canadian right now, let's say I sell over here, my stop loss, right, cannot be here, or here. Well, you can. No one is going to point a gun in your head and say that you cannot put down there. You can, but it's not advisable to do so. Why? Because the price, right, could just hit down lower a bit, and then it starts to retrace back towards this 20 MA, this area of value. And if your stops, right, is anywhere from this highs to the 20 MA, there's a good chance you're going to get stopped out, right, if you set it within this area. Are you with me? So for me personally, I would prefer, right, to let the 20 MA catch up with price. So for the 20 MA to catch up with price, what it needs to do is for the price to consolidate, right? As the price consolidate, and this is since it's a 20 period moving average that takes into account the summary, the prices of over the last 20 candles. Long story short, if the candles were to consolidate, the 20 MA will slowly eventually catch up with price. So that's what I want it to do, right? I want the candles to consolidate, right? Maybe another 3 or 4, 5 more candles, the 20 MA will start to flatten out and catch up with price. Now if the price, right, let's say it comes up like that, right, and the 20 MA has flattened down closer towards the price. Now if it breaks below this low, I can now reference this 20 MA to set my stop loss, right? Maybe just 1 ATR above it. And now the stop loss is not only is it tighter, it's the price now also has a difficulty to go and break above it, right? Because now the 20 MA it serves as a barrier to hold down these lower prices, whereas previously when the 20 MA has not catch up with it, right, there is room for the price to just spike up and down. But now as the 20 MA has catch up with it, right, you would see that price would have another obstacle, right, to break above it, as the 20 MA serve as a barrier to so-called prevent higher prices, right? And that's not the reason why price can't break out higher, okay? The reason why when the 20 MA catch up with the price and there's a higher probability of a breakdown towards the downside is because there's a build-up form on the charts, right? So you can imagine, right, let's say the price consolidates over here, right? There will be traders who are at this point, I say, oh, the market is bottoming out, let me go long. And they go long, their stop loss, right, is below this lows over here. The stop loss orders would build, right? As you know, you go long, setting a stop loss below the lows of so-called swing support or the swing low. And you can imagine if the market reverses, right, and hit this cluster of stop loss, right, these are all the strong selling pressure to push the price down lower, right? So the more cluster of stop loss there is at the lows, the longer the price consolidates, right, the higher probability of a breakdown. So compared to right now, the price barely consolidated, right, the cluster of stop loss below this low is not as much. So this is why you want the price to consolidate, and that's why when the price consolidates, the moving average tends to come down lower, as though it's coming to keep the price down lower. That's the kind of a pattern that you'll see on the charts. Okay, so this is our pound Canadian, right? I hope that makes sense, right? It's a little bit technical, going to the behind the scenes of what the players are doing. So anyway, that's for pound Canadian. Before, right, I end off today's video, just want to share with you also a couple of trades I took, right? Some winners, some losers, and again the thought process behind it. So pound Canadian is one trade that I took, right? So again, very straightforward. Again, this one, market broke below this area of support, right? Notice broke below this area of support. Then now this will become previous support turn resistance. Price rallied higher over here, come down, rallied higher, came down and rallied higher once again. So at this point, right, this is where I got an entry trigger to go short. So you can just zoom out a little bit. Right, at this point, you have a downtrend. Okay, market is heading downwards. An area of value, right? Area of value. This is an area of resistance, previous support and resistance. And the third thing is you have is the entry trigger. Let's call it E. Right, this is the bearish engulfing pattern. This tells you the sellers are in control, right? And the price has closed strongly lower. So I went short, stop loss, right? 1 ATR above this highs, right? And what I was looking for is for the price to at least reach this swing low over here, right? If you can reach here, right, then I would start trailing my stop loss as it progresses down lower. So when the price hit this swing low over here, I started trailing my stop loss right on the previous candle high. So when the price breaks and closes above the previous day high, right, I exit the trade. So it came in on this candle over here, right, on this candle here. Okay, this candle has now break and close above this previous day high. So this candle, right, didn't really break and close above this previous day high. I mean, from the looks of it, it's very close. So I give it one more candle just to be sure. And true enough, I got out at a worse price, right? But hey, following your rules is following your rules. So this is where I exit the trade on this pound dollar trade. So just share with you one more example. Aussie yen, very similar setup, and not looking too pretty for me. Okay, so you can see that over here, again, Aussie yen market structure is down, right? Trend is down. Okay, trend is down. Area of value, right? You can see that the price now has retested, right? This area of resistance. So it's an area of value as well. Market structure is down, area of value. Entry trigger, we have this bearish engulfing pattern. So we have it as well, our entry trigger. And this is again where I went short, very similar to the pound dollar trade, and stop loss 1 ATR above this highs. For this trade, right, I had my stop loss about here, right, and I was targeting this level here, minimum. Meaning, right, the price is either going to hit my stop loss here or at least reach this level, and then I would start, to trail my stop loss. Okay, it has to be either hitting my initial stop loss or my so-called initial target. I'm not really having a fixed target here, but I want the price to at least retest that level, and then I will start to implement my trade management, right? So in this case, the price didn't reach the level yet, and it's now pretty much hovering against me. So at this point, right, I want to share with you something is that many traders will look at this and say, hey, Rayner, why don't you just, why don't you exit the trade, man? It's going against you, right? You can, cut your losses small, take a smaller loss, yada yada. And understand where they're coming from, because I used to be that kind of trader, right, where I would try to minimize my losses. But here's the thing, right? My stop loss has already been placed, right, at a level where it will invalidate my trading setup. Meaning, I don't just randomly place a stop loss in the middle of a chart. It has been planned carefully, right, at a level where it's beyond a market structure. And the market structure that I'm leaning against, right, is this area of resistance, right? This area of resistance, I'm setting my stop loss 1 ATR above this highs. Let's say somewhere here, okay? It's leaning against this area of resistance. So you can see that the price now is at this area of resistance. Why do I not want to cut short the trade smacking it at an area of resistance? Because if this resistance, let's say it can't break out, it holds and reverse down lower, I clearly, right, would be very foolish, right, to just exit the trade even though I'm not proven wrong yet. So I do agree, from the looks of it, it's not looking too pretty, right? The candles are against me. You can see now starting to, build up over here, closing higher. But hey, ask yourself, right? Ask myself, is the trading idea invalidated? No, resistance is still intact. The trading idea is still not invalidated. So why should I exit the trade for the fear of losing? Doesn't make sense. I already planned my risk management. I already planned my exit. I know how much I could potentially lose on this trade, and I just simply am going to follow the plan. Okay, so this is Aussie and just to share with you a little bit of a trading psychology aspect to it, right? And I hope this is something that you will consider as well in future, especially if you're the type of trader that tends to cut your losses short, right, instead of giving it adequate room, right, to run. So I have no idea what's going to happen, whether it's going to be a winner or loser, right? But I know that my risk management, my stops are in place, and I'll just let the market decide whether it's going to reward me or stop me out for a small loss. Okay. Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Traders Age, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish these type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Traders Age member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can shorten your learning curve and quickly level up your trading. So you can see that every week we publish a new video on the markets. And moving on, right, we have a forum coming soon. So for those of you who are watching this right now, the forum might already be up. Okay, so this is coming soon. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog post and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can download this checklist to review it, right, to make sure that you're on the right side, on the right page, right, and not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to help you with your own trading, like the MACD, MT4. There's some issue with it. We have fixed it over here. We have the Don Chen channel, news reporter that alerts to you potential important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy, because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right, even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Age member, right? New content are updated regularly for the backtest research lab, weekly trade alerts, premium strategy guides, and much more, right? And also forum is coming up soon, so you can interact with like-minded traders. So I'll put the link below so you can check out Pro Traders Age. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.